Time now for our second crypto regulatory panel, our second regulatory panel of the morning. We're going to be looking at compliance challenges which are raised by crypto and the solutions that are being developed to meet them. Your moderator is going to be regulation expert and consultant Mattia Rattaggi.
Or what is the main challenge to applying the traditional compliance discipline into the crypto economy and crypto finance?
I think the main challenge is that you need to apply old rules that has been made for a business which is traditional, and it's a face-to-face business, like the traditional banking is face-to-face, and you have to apply into an online business where we have new tools, and that's the main challenge, that you need to adapt it and be flexible, but the regulation is not flexible, right?
I would say it's education. Education on both sides, education particularly with the banks also, but also education with those companies who want to open up a bank account. And we have come a long way over the last 12 months. If I see the quality of applications for bank account today, they're miles better. What is still missing a bit on the bank side is education on the job, practical experience, confidence in the technology, that this is not all toxic. But again, that's something that takes time, and the more use cases, real cases we see, the faster the industry will learn.
I would say that maybe the main effort for the traditional compliance is to say why not and try to understand also some basic IT aspects that are so far from traditional compliance, and also to try to use some principles we already know, for example, for the video identification, online identification, and to try to use these already known principles also for new crypto clients or ICOs or other potential customers for banks.
I think at the end of the day, it's a question also of willingness to support and willingness to be open to new ideas. And bottom line, I mean, we in Liechtenstein, we are lucky enough to have a financial market authority that is really also willing to help us and willing to give good guidelines. That's important. And at the end of the day, I mean, bottom line, it's in most cases, it's about KYC.
So in one sentence, I would say it's risk and how we manage risk. Technical solutions today are not completely ready to actually support the higher risk associated with a digital business, and we actually see also lack of education and somehow resistance. And we know that many business comes to Liechtenstein, for example, from Switzerland, and this is we should change as well. And we see more and more CRO, for example, become more friendly, but still it's a big issue. So technology and let's say regulatory friendly environment.
I can say that regulation is a challenge for sure, and it's evolving. It's an evolving challenge. When Bitcoin was hitting an all-time high in December 17, it was the lack of regulation, and nowadays I think it's an inconsistent approach when it comes to regulating crypto assets, virtual currencies, regulation.
Markus, you have the longest experience probably at Freak. About the culture, I mean, obviously, how can you manage to, basically, the top management needs to be behind it, needs to support proper compliance, adaptations, also tools, providing funding for tools, etc., etc. How can you?
Blockchain banking, as we call it, it's not something that you can just do beside other things. It's really something that you have to focus on. It's really a strategical decision. You have to build the processes, you have to build up knowledge in the front units, but also in the compliance unit. That's a need. You have to do so, otherwise you can't do it properly.
Valentina, what is your view on the utility, on the impact these guidances?
The Swiss banking guidelines have been certainly useful to confirm that our compliance procedures that we have already defined was going in the right way. And maybe for new banks that are starting to accepting banking accounts for crypto clients, these guidelines could be a very good starting point to implement then an internal procedure, taking always into consideration that every bank should define its own risk management approach. And in our case, the solution we have tried to find is to develop a procedure that is as differentiated as possible according to the specific phase of the project that the corporate client is developing, or the specific phase of the ICO.
And for the guidelines which was created by Banking Association, I would say it's really helps because we also advise clients on actually creating these fintech startups who will become later brokers or bank. And we still need a bit more details there and more let's say on particularly onboarding, using wallets, checking wallets, what should be the guidelines, how we identify risks with exchanges, for example. It's all a bit, when you start from scratch, it's difficult and you have to go to industry and talk to different people and you pull information from different sources. It's better to more consolidate it. It was a good try, but maybe we can work all together and develop something.
Well, I think the guidelines have established standards, and it's very helpful also for us. I mean, we're a crypto broker, but we have companies with Blockchain Nexus, of course, which want to open an account with us, so it's helpful, definitely. During my time at the bank, the biggest challenge was for blockchain companies to open a bank account, so I think this has changed. And I will be curious to see the further developments, the second edition of these guidelines, how they will further develop.
Thank you for moderating back to the ball to Adrian.
We have the guidelines in place for almost a year now. The feedback is what we hear is what is echoed here. Good start. It certainly helped to establish certain standards or identify the risk areas. What comes next? We're going to release a new version in August, September. There are 3 things we're going to change. First, we have learned from the industry, from the likes of you. I mean, this is your daily business. We would be stupid to ignore that, so that you will find a lot of practical experience in it, a reflection of reality. We obviously had to adjust certain terminologies, just not to look too outdated. And we will include new regulatory developments, just as what we've heard before. The FATF has come out with certain guidance, and in one way or the other, we need to make sure that this finds its way into the new guidelines.
I would like to ask Delphine, who represents an exchange, what's her take on these FATF guidances, and what also do you think in Switzerland we should do to implement them in the most helpful way for the industry?
Well, you know my strong opinion on this guidance. I'm against it, but you need to see it from a positive side too. Like, I do think it's a good try, because I do think maybe the industry needs to be stronger, regarding AML and terrorist financing. But on the other side is what they ask an exchange to do. So there is 3 points on my side. The first one is, as an exchange, you will need to be registered or licensed. This, it's okay, right? You're based in Switzerland and you want to provide your service, let's say in France. France can ask you to be registered and licensed there. That's a big problem, because a crypto business is a global business. So meaning, as an exchange, if I operate in 150 countries, I need to get licensed and registered in those countries too. So this is not good for my business. And the third point, as you all know, I guess is more controversial point, is recommendation number 16, where as an exchange, we will need to exchange information on the originator and the beneficiary. This is problematic from a data privacy point of view. I'm not sure my customer wants me to exchange his information with another exchange. That's the first point. From a technological point of view, it's going to be very costly, and I think it's going to be very difficult to implement. And then the third point is what is going to happen? I mean, the crypto business is supposed to be, I'm very idealistic. It's supposed to be a free business. I mean, there is a philosophy behind it. This goes completely against it. In the speech just before from the FAFT, it was saying, we're going to see in 2 months if the crypto business is going to switch from the centralized, decentralized exchange to purely peer-to-peer exchange. But I mean, like in 2 months, nothing is going to happen, right? I mean, I strongly disagree.
Magdalena?
Well, I think that the guidelines are not too favorable on the industry of blockchain and cryptos because I think the burden and the threshold, for example, for doing customer due diligence is at $1,000, which is super low. I mean, the administrative workload coming with this, I don't know how realistic it is. I don't consider these guidelines to be very practical and oriented towards the industry. So yeah, very strict approach they have taken, and it's also like a bit trying to control the industry, because if you give out all the data from your clients, then you take away a bit of the blockchain spirit. Yeah.
I think in a global perspective level, it somehow killed the idea behind this peer-to-peer business, where we actually, by implementing these rules, the regulator will create the niche for the actually transactions which will be somewhere that they can catch anymore, cannot track. And also it will somehow consolidate the industry where the small exchanges or brokers, they will be not able to afford to have the same standards of compliance. The industry is very young, it's not mature, it's too early to make, to put such, restrictions and to make it so regulated. Let her develop better, and I would be really upset if we have to implement all this stuff within next year.
Markus and Valentina, strictly speaking from a bank point of view, which way are you impacted?
I don't think that the FATF is willing to amend the general AML KYC CTF principles for this new business. FINMA in Switzerland really has to take care of it, have to be open to this new area, and have to make further steps, because the FATF really, they are asking for, they even said within a 12-month period they're going to make a review and look what steps have each country done, and that's quite hard.
Valentina, do you agree with that?
Yes, I share this view, and I think that from one side, from the FATF guidelines, can come some advantages for banking compliance, as usually compliance adopts list of accepted exchangers, accepted AML and know your client providers, and so if the future will go toward a direction where the virtual asset service provider will be registered, monitored, and supervised, it will be easier for the compliance to conduct due diligence in the future, requiring relationship managers to only select clients who fulfill in some way these requirements. But from another side, there will be also some disadvantages, as if some international AML principles will be too difficult to be implemented in practice. The risk that compliance office will face is that we may have potential clients that cannot be onboarded until in the short, medium term, as they will not be able to implement these AML requirements.
Okay, thank you. So from a crypto compliance perspective, what do you think will happen in the next 2 years? Maybe Magdalena?
Well, I think that crypto compliance, crypto assets will find much more adoption, and I think that education is very important in that sense, because compliance nowadays is a little hesitant towards cryptos because they don't understand it that much. But I conduct crypto compliance trainings for banks, and when I do that, I explain them that they can use a lot of the knowledge they already have on fiat assets, apply them to crypto assets, and then it's not such a big deal anymore. So I see an adoption going in that direction.
Crystal ball of GVP?
I would agree that education adoption is the main target now. And I would start from the board of directors, members of the traditional banks as well, where they actually not so tolerant and open because they just don't understand how they can mitigate the risk and how they can implicate these new technologies and new product offering. So I will start from the top.
What will happen in Liechtenstein?
We're definitely going to have the new blockchain law within the next, at least by the end of this year. So we're faster than Switzerland in this case. So the regulation will come. In Liechtenstein, it will come in Switzerland sooner or later. Yeah, and I'm really looking forward to that. And I really hope that the whole market does see the regulation also as a possibility and an opportunity to get better, yeah.
Valentina, in 2 years' time, it will be much easier for companies to open bank account, isn't it?
Yes, I think that in the future it will be easier also for compliance in comparison with the last 2 years when we have completely no regulation, no guidelines, and this, as for every other banking sector, is just a matter to know risk, to understand risk, and to try to find solutions to mitigate such risk.
Adrian, from the point of view of the banking industry in Switzerland, will there be more endorsement?
What it needs is more practical, more day-to-day touch points in the banks so that confidence, familiarity with technology, with crypto is growing. And I see, for example, the SIX Digital Exchange as a great project here. It will affect the value chain within a bank across many different segments. And it will trigger practical questions across various compliance departments, and that will accelerate learning.
Thank you. Last word?
Well, for the next 2 years, it seems like, as has been said before, education, people are going to get more educating, and also as a compliance officer with regulation coming, is also going to help us to be able to implement things. Because if you don't have regulations that apply to your business activity, you go to the business and you say, I do think we should implement that. It would be good for our business, good for our reputation.
Very good. Now, thank you very much. We will take stock next year of the developments.